Hello fellow chartists, welcome to my YouTube channel. I am the Chartist, and today backtesting gold was in full effect. It was dropping. Boy, was the bear. It's winter time, right? And the bears are still eating. Isn't the bears supposed to be hibernating? Didn't happen today. As you can see here, flow sentiment bearish. Alright, I got it filtered for the 200k premium or above, and 90% is into puts. These are all the contracts that came in towards the end of the day, and this one's about 6.1 million. 402. This is March 18 expiration. 402 strike price. Wow. So there's a 6.4 million for puts, 402 strike price. So a lot of money coming in for puts, guys. That's where big money is aiming for. They're bearish and biased to the downside. But let's recap the SPY for the day. This is my Discord, guys, and I put this morning the plan. If bears can clear 435 resistant, wrote in big words. Remember, we short from resistant. If it can clear 435, we bounce to 438 to 440 zone. So I would only be bullish if the SPY cleared 435 and recaptured it. That means it break above it and back test it as a support and bounce. Then I would have been more bullish. Okay, never happened. All right, we dip base there, clear 45 is next. Only if the 435 resistant was cleared, okay? So I'm giving my group a bullish scenario, all right? Got to go over the scenario. 427 must continue to hold now, though. Failed there, big breakdown begins. So, of course, if you watched yesterday, you know I had support at 427 to 428, and I post my support and resistance levels every morning here in ETF buy and sell levels because support and resistance where I usually buy or sell. Okay, so I had support at 427 to 428, critical. And below that, I had a next price target around 420.7. Okay, so pretty straightforward. All right, and of course, I update the group as the day goes on. So if you see here, this is a 15-minute chart of the SPY. It opened here around 9:30, of course, and it opened around 432.66. So it was below our 434 to 435 zone resistant, but above our 427 to 428 support. So what do? You gotta wait for, the price action to show its hand, right? So anyways, it came down here, pretty much started the morning bearish. Came down here. Now this happened around 10 o'clock when it started dropping, all right? Got pretty close to the 430 level, and around here, this happened at 10:02. I let the group know, big test here at 430. If that failed, that's a big warning shot that we go and retest 427s. Okay, so I don't just give my analysis, in the morning. I do it in real time, okay, before the market open and as the market continues. So around here, around 10, when I let the group know 430 is going to be a big test. If we lose that, we are most likely going to head down to test the 427 support. As you can see here, it bounced at first on this candle, but the next candle around 10:15, we lost it, big drop, and it went all the way down to 427 to, well, it went as low as 426.5. So it went down to our support zone, recaptured. Remember, when do we go long? We go long off support, all right? Recaptures or represent false breakdown. So if it broke down below 427, quickly washed below, but recaptured. That's a false breakdown. And offered the support and went back up and back tested the 430 level. Okay, now 430 I had around early 10 o'clock. I said it was a support level, came back tested it, and it started going down even further for the rest of the day. Okay, so remember what I told you guys yesterday. Anytime we lose a support, you can either, sell at the support or sell on the breakdown, like enter a put or something, or wait for the back test and see if that support get tested as a resistant. As you can see, it got tested as resistant. This rule applies on any time frame, 15-minute time frame, daily chart, doesn't matter. So as you can see, it back tested and then it dropped even lower. Around here, we lost the 427 support. Lost it, dropped a little lower, came back and back tested the 427 to 428 zone support as a resistant and dropped even further. It went as low as 421.3. Got pretty close to my 420 price target, but we'll see what happens, you know, after market, pre-market, or tomorrow in trading hours, okay? So, pretty profitable day on the Discord. Let's take a look at the daily chart. Now, there is something I do want to mention. Some of you guys might like it, some of you guys might not. You see these orange letters. Some of you guys might recognize what they are. Some of you guys might not. But what these letters are, basically, they're based off of the Wyckoff method, okay? The Wyckoff method was made by a guy named Wyckoff, all right? That's his last name. His first name is Richard Wyckoff. A lot of people like to make jokes about his name, Richard Wyckoff. Anyways, so a lot of you guys should know already that the market's pretty manipulated, all right? Whales, they're the ones that move the money, the market makers, all that happy stuff. So this guy, Wyckoff, he made a method or schematic that pretty much illustrates the phases on how the whales move their money, okay? There's a distribution phase where the whales are looking to sell. Then there's an accumulation phase where the whales are looking to buy more. Right now, obviously, we're looking at distribution schematic number 1, which I think applies to the SPY, okay? SPY was obviously in the distribution phase, which I labeled here. It's not going to be perfect 100%. And remember, guys, like seasonality, because I know some of you guys like looking at the seasonality and tracking seasonality. Like that, we got to take this with a grain of salt, okay? It's not going to be 100%, okay? But SPY's obviously was in the distribution phase, okay? Now, if it tracks with this schematic, SPY should be around phase D to phase E. Phase D to phase E around here, okay? So which tells us that this bear market or this correction is going to come to an end soon, but it's possibly we're going to see more lows first, okay? Now, obviously, after the distribution phase comes the accumulation phase, all right? If it comes to that, we can talk more about that, all right? Accumulation phase is when the whales, they start looking to buy more before they eventually takes off, okay? But right now, we're in distribution, phase D to phase E. But like I always say, price action is king. Price action is number 1. I got the SPY in this falling wedge. Obviously, it broke down today, okay? So for me to be bullish again on the SPY, obviously, when we lose a support and that support becomes resistant, that's bearish. So if we break a resistance and that resistance becomes a support, that is bullish. So the big critical resistance for tomorrow will be this level right here to get back in and recapture this falling wedge. That's 427. All right, 427. SPY needs to get back above 427 to put 430 in play, and then you can see higher price target up here around 434 to 435 zone. And if we can clear that, obviously we can head back up to 440, possibly break out of this falling wedge to the upside instead of a breakdown. So obviously we are in breakdown mode. That is very bearish. So 2 things we do when there's a breakdown. This goes with that back test and go strategy I be talking about. It's a tactic. It's not a tactic that I made up or anything. It's been around for a long time. I just like to call it back test and go. Anyways, so back test and go. It means after losing a critical support like we did today, breaking down from this falling wedge, you want to see a back test. If it back tests tomorrow, keyword if, doesn't have to. But if it back tests tomorrow, what we want to see is this level, 427, get tested as a resistant. Okay? If you're a bear, you want to see it get tested at resistant. That's where you could look to short. All right? And if you see it back test there and you see some selling pressure, it starts rejecting, that is a bearish sign that we're going to see more downside. Back test and go continues. Okay? You can see in this previous candles where SPY loses a previous support and it back tests that support as resistance, it goes down. It drops this one, back test that resistance, that previous support as a resistance, it drops down. You know what I mean? Back test and go. It's a good tactic. So watch that level. 427 is resistant now. If SPY breaks above, that's a bullish recapture, a sign of a false breakdown. False breakdowns are very bullish. Then play it level by level. 430, then 434 to 435 zone, and then so on and so on, okay? If we get rejected for 427, if we get back tested and rejects from there, that's a sign we're heading down lower. Let's see if we'll hit my 420 to 421 price target zone. That's the low back in January 24. That's my next price target. I don't think it'll hold. We could get a bounce there. I could be wrong. We'll see if we get a bounce there. But if we don't, I have more downside. Okay. Around 417 to 418 level. All right. And if that doesn't hold, I have a big level down here around 401. Okay. There's still more levels. 417 to 418 level. That was a support back in June. Okay. And of course, we have some levels here around 405, 404 to 405. Those were support back in May of last year. And of course, the big one right here around 401. That's a gap fill back in April of last year that never got filled. And if that fails, got the support down here around 397.5. That's a support of this megaphone pattern that you see here. All right. This connects to the low of October low to September low, and it starts from the August low. All right. So that's 3 to 4 touches, technically speaking. All right. We'll see if SPY touches it again. Okay. But remember, we got to play it level by level for tomorrow. I want you guys to watch that 427 resistant level carefully. Above, bullish. Still got to manage your risk though. Rejection from there is bearish. Back test and go. Remember. Okay. And of course, the next support zone is 420 to 421 zone. Could get a bounce there. Double bottom potential pattern playing out, possibly. Okay. And if we lose that, then like I said, we have more downside. Let the price action guide you guys. VIX real quick. VIX broke out, guys. I have false breakout mode yesterday. Today, it fixed that. It corrected that situation. It broke out. That's very bullish. A bullish VIX is a bearish SPY. Now what we want to see next, if you're a bullish on VIX, that is, what you want to see next is this double bottom this double top, to get canceled. They both have a high of 32.04. We want to see a VIX above 32.04. VIX break above that, 34.8 is in play. Okay, very bullish. If you don't want the bull, if you're not a bull on VIX, if you're a bear, what you want to see is a false breakdown. So you want to see VIX back below 29. If VIX is below 29, that's a false breakout of this triangle pattern. It'll go back down. False breakouts are very bearish, guys. All right. If we lose it this time, if VIX drop below 29, I think it'll go down lower to other support and retest other support levels. Okay, guys. So just let the price action guide you. Try not to be too bearish to one side. Triple Q is making a new low here after that breakout from the triangle pattern. Holy moly. After the breakout from the triangle pattern, it came down to test the next Fibonacci level yesterday, looking like a double bottom potential pattern playing out. But nope, canceled. Today it broke even lower than that. I have no support for the Triple Q until 317.8. We'll see what patterns start to play out in the coming days. Well, there's some support. This was a low back in June of last year. So there's some support around 328.5. But below 328.5, there's no support until about 317.8. All right, so that's what I got. There's some support at 328.5, and then of course watch 334.4 level. If Triple Q recaptures that, that's pretty bullish. Could see more upside. All right, but watch the back test. Okay, if Triple Q starts, go back test that level and strong rejection, we might see more downside. Okay, guys, remember, back test and go. It works. It happens. All right, you can see it here in previous candles. Lost this support, back tested it, goes down. Lost this support, back tested it, goes down. It happens. It doesn't always happen, but when it happens, it happens, and it happens a lot, more than we think. Okay, guys. So remember, recapture of 334.4. We mean to go back above and treat it like support. That's bullish. Obviously, I could see more upside. But if it continues to be resistant, we get a rejection there. 328.5 is in play. Then below that, 317.8. That's a big juicy move to the downside. Dow Jones double bottom pattern in play here. Okay, this is a big move to the downside. As you can see, it had this megaphone pattern. It broke down from it yesterday. Today, it treated that level as a resistance and just big body candle to the downside. Okay, so we got support here at 334.34. All right, it closed a few cents above that level. But if we lose that, I have no support for the Dow Jones until 321.76. That is a big move to the downside. Okay, this could be an A, B, and this is C wave to the downside, guys. If you like Fibonacci, all right, 321.76 is the next support. If 331.3 fails, okay, that's support. But if it holds, I want to see it go test this megaphone pattern again. That's a resistance now. It's at 337.7. So above that would be a recapture. Puts 340.3 in play. All right. But other than that, we get a rejection from there, or we lose the support and see that support treated as resistant, more downside incoming, guys. IWM, we had this rising wedge last week, broke down. I've been bearish on it since then. All right, we lost this 197.29 support level yesterday. Okay, that was a 23.6 retracement. Today we opened above it actually, but it was lost. An intraday after it was lost, it was treated as a resistance and continued pushing down. I actually alerted this in the group today. Very proud of this trade. I don't know if anyone took it, but I let the group know 197.29 is lost. I'll be bearish down to 192. It dropped down to 192 today, guys. So, good trade if you took it, but pretty bearish. I would be bullish again if we can recapture 197.29. Okay, but if it backtests and it rejects from there, obviously, we're going to see more downside. Next support is around 188. All right, nice move to the downside. Tesla got crushed today. I alerted this in the group yesterday. Guys, I hope you guys understand about back testing goals. I've been repetitive about it. But you guys can clearly see that this strategy worked because it's happening, guys. Yesterday, what level did we lose? See this purple line? That's the 200-day moving average. That was a critical support level that we did not want to lose if you was a bull, that is. We lost that level yesterday. So obviously, what happened today? We back tested that level. Tesla back tested that level, treated like a resistance and just, falling knife scenario over here. All right, it dropped all the way down to my 765 price target. All right, that served as both as a resistant level and a support level in the past. All right, that level is lost, so we'll see if it gets treated as a resistant tomorrow. Okay, if we can recapture it, that obviously will put 791 to 792 resistant zone in play, and back above that, we'll see if we can retest the 200-day moving average. But if it treats it like a resistant, back test it, treat it like resistant, 727 to 724. So about 724 now will be a critical support and will be the support of this falling wedge pattern. Okay, could possibly look for a long entry there. Okay, possibly a bounce there, 724. Okay, that is support of the falling wedge. If that fails to hold, then it's going to get really, really ugly for Tesla. It's already ugly, but it can still get even more uglier. Okay, so remember, turn bullish if previous support level that were lost gets back tested and then recaptured. Okay, but until that happens, I am bearish on Tesla. Bitcoin bouncing off of this level right here, 36.3 support level that I had. Okay, that's based on the 50% retracement. If we scale back a little bit, see some buying pressure. However, it's not making a strong move to the upside. All right, it's getting rejected at the 5-day moving average currently. So 38.3 is a good resistance level. If we can break above that, we can possibly go test the 20-day moving average at 41.5K. And then the big one is multi-trend line since October 2020. All right, it's at 43K, 43.1K. Above that, I would be bullish, and that is when I would look for entry. Unless that happens, Bitcoin is looking bearish, guys. All right, so that's what I got for you guys today. I hope you guys found this video useful. I hope you found some value in it. Thank you guys so much for listening to me. Y'all have a good day.